Hi, welcome to Lesson 4. In this lesson, we're going to cover the basics and answer the following 4 questions. What is a stock? What is a dividend? What is the stock market? And what is value investing? What is a stock or a share? A stock or share represents ownership of a company. Back in the day, when you bought some stocks or shares, you would receive a stock certificate, much like the one you see on the screen here. Nowadays, you don't need to worry about physically handling stock certificates. All of the transactions and the certificates are stored online. The important thing here is not to think of yourself simply as a shareholder who is owning a piece of paper or a stock certificate. I really want you to think about being a shareholder as being an owner of a company, which you are. For example, Coca-Cola has a little over 4.2 billion shares outstanding. If you were to buy all of those shares, you would own Coca-Cola. But if you only bought 2 shares, you would still have part ownership in the company, but your ownership is, as you can see on the screen, very small. But nevertheless, you are still part owner of the company. And as an owner of the company, you're entitled to share in the profits of the company, which leads us to the next question. What is a dividend? A dividend is the company sharing its profits with you, the owner. For example, if the company is paying out $1 a dividend per share per year, and you own 1,000 shares, you will receive $1,000 every single year for as long as you own those shares and as long as the company continues to pay the $1 dividend per share. The dividends are yours to keep. You can reinvest them if you wish, or you can spend the money if you wish. What is the stock market? This is what most people think of when they think of the stock market. A stock market is a place where stocks are bought and sold. Now, you don't have to go here to buy and sell your shares. You can buy and sell your shares from the comfort of your home, and you can do it all online. And it's as simple as paying bills online. In this course, we're going to focus on 3 stock markets: the New York Stock Exchange, which is the largest stock exchange in the world; the NASDAQ, which is another exchange in the US; and then in Canada, we have the Toronto Stock Exchange. For example, if you wanted to buy shares in McDonald's or Walmart, you would place an order with the New York Stock Exchange. If you wanted to buy shares in Apple or Google, those trade on the NASDAQ, and shares of Canadian Tire and CN Rail trade on the Toronto Stock Exchange. Now, remember in lesson 2, where I covered my story of how I got started with investing, I talked about learning from the best. I spent 3 years reading about some of the best investors in the world, interviewing other investors, and what they all talked about was value investing and investing for yourself. So what is value investing? Value investing is buying quality stocks when they are undervalued or priced low. Why would you want to buy a stock when it's priced low? Well, stock prices go up and down all the time. And in this example, at $14 a share, the stock is priced low, or it's undervalued. And at $51, the stock is priced high, or it's overvalued. So what's so great about buying stocks when they're low? Well, in this example, if you were to buy the stock at $14, you are going to maximize your profit, right? So later on in the future, as the stock price goes up, you're going to make a lot more money. Rather than buying the stock at $51 or at $49, the price is already overvalued and there's not much room to make a profit. So it's very important to focus on buying stocks when they're priced low. So how do you know when a stock is undervalued, and how do you know when it's a quality stock? Well, to help answer that question, I've created what I call the 12 rules of simply investing. And we're going to cover these 12 rules in the next module.